Okay, today I'm going to talk about the cup with handle pattern, the bullish cup with handle pattern. Many of you have probably heard about this. It was made famous by Bill O'Neill in his book, How to Make Money in Stocks. That was released, I think, back in the late 70s, early 80s. Worked great in the 80s and 90s, and it's worked pretty well for the past 10, 15 years. Not as well because we've had a slower growth economy and growth stocks have not performed as well over the past 15 years. But it still does perform well on the right stocks. It also works in day trading too. If you find these patterns or this pattern set up in the early morning, say between 9:30 and 10:30 to 11, and even later in the day if you have really massive volume, bringing the stock out of the pattern, it often does very well as well. I mean, if every pattern could be a bull flag or the most bullish pattern, in the market, that would be great, but they're pretty rare. This pattern performs well in market uptrends. Okay, so one thing I want to make clear is that the cup with handle pattern works well during bull markets. It does not work in bear markets. It should be avoided in bear markets, and it should be avoided in corrections and a market that is peaking and going into a correction. So you want to make sure you understand that and trade this during a market uptrend, at least for a trend that's gone for at least a few months, where the market's making higher highs and higher lows. To give you an example of this pattern, I'm going to show you Facebook. This is a stock trading opportunity that we featured to our subscribers back in late, I think it was 2012 or 2013. Let me see this chart here so I can make sure I've got the year right. Looks like it was back in 2013 when it broke out. It was an IPO back in April or early May of 2012, and they had a lot of problems early on. It was such a large IPO and so much, I think, buying interest that there was all kind of technical problems when the stock went public. So it was kind of famous for a while for that. But then, over time, the stock settled down and started forming a base as the company started to reaccelerate their earnings growth and their sales growth, which is key. As that was going on and as this base pattern was forming, we were watching it closely, and then later in 2013 it broke out in July of 2013. But the pattern itself, and we'll start there, is, as the name implies, a cup with a handle. So we can see from July to December here in 2012, we can see this cup being formed. This kind of sell off, it kind of rounds around, goes back up, and then here it starts a handle here in early 2013, and the stock trades sideways to downward over the next few months. And then there's a breakout above the top of the handle, which is the resistance in the handle, which is right here around 32.21 on the stock. It ideally explodes out of that handle, out of that resistance, and then takes off from there. That's the entry point when it breaks above the handle. Okay. Now there was another entry point here that was actually a pretty good handle. We did have strong volume on the breakout here above 28.88. You could have jumped in there. It went up about 10%. You could have jumped in there, put a stop near your entry point or a little above, and took profits at this resistance here, which was around 33.45. And then you can see this one here, which it nearly made it to, actually it didn't make it to around 32. So, you could have sold some around there and then left some on with a stop loss at your entry point with that pattern. But there was a larger cup with handle that developed over time as the company started producing better and better earnings reports and strong sales growth at the same time, and the outlook was getting better and better. So that point was here in July when we featured the stock to subscribers. That breakout was on even bigger volume above this handle, and then the stock broke out and really took off from there. In fact, this Facebook doubled from that point. So yeah, you want to see this handle trend lower. You don't want to see it trend higher. Sideways is okay too. You just don't want to see the handle trending higher, because at that point it's not really a handle. It really hasn't reached its handle point yet, or handle phase yet in the pattern. A good target on this breakout is 20 to 25% above the handle. Okay, so we enter just above the handle here. In this case, we could have put a limit order in for let's say $40, which was about 20 to 25% above the entry point, and we see we got that within a few weeks. And if you do see that target, if you do see the stock nearing that target within the first few weeks, I say 2, 3, 4 weeks, you want to keep a portion of that position if the stock is a great growth stock with great potential and very strong earnings and sales growth. And if you get a really explosive breakout like we saw here with Facebook, in this case, you should probably keep a portion of your shares and ride the stock higher and keep it for, a few months or so with a stop around your entry point. So that's a good way to play it. You can raise that stop too over time if you want to, above a good support level. And I'm going to change this chart now, and so you can see how much the stock increased in price over the next few months. And we can see it went from that breakout point in late 2013 up to over $70 here in early 2014. You could have trailed the stop, below these consolidation areas. Here's one, here's another, and then here's another, and then here's another. So as time goes on, you can just lift that stop over time, but give it room too if it does have the potential to really increase in value over time. And so that takes taking a hard look at the earnings growth, the earnings reports, the sales growth, return on equity, insider ownership, if insiders are buying the stock or the company is buying the stock or not, bullish factors like that, and just the overall growth of the company. If the sales are growing 20% or more, if the earnings are growing over 20% or more on a consistent basis for a number of years, not just for a quarter or two, if it does have that big potential, then keep a portion of your shares and just carry that stop loss over time below these consolidation areas, and you could have a big gain. Okay, so that's a cup with handle pattern. If you have any more questions or want to learn more about these different patterns, go to our site, Tradetobefree.com. Be sure to like this video and subscribe to our YouTube channel. We'll have a lot more of these videos over time. And I'm Brian Neal, founder of Tradetobefree.com and InvestBeFree.com. And if you want to find these patterns or have these patterns delivered to you before they break out, sign up for a free trial of our newsletter on our site, Tradetobefree.com, and we'll set you up with a 3-week free trial. You can learn a lot more about these patterns and other swing trading patterns as well. And we also sell a book on our site that explains our swing trading methodology in more detail. So, all right, so that's a cup with handle pattern. I'm Brian Neal. Hope you have a great day, and we'll see you next time.